Could Canada be on the cusp of a banking crisis? It looks like many of the chartered banks, since they reported earnings, have got increasingly risky. We're going to get into that and what's going on and what could be causing a lot of this risk to happen. The first thing you have to look at is the number of GTA homes being taken over by lenders is skyrocketing, and that's not my words, that's the mainstream media. So this is really happening now. You are seeing bank sales that is going up and up and up, and we're going to get into the metrics of these banks, and I'm going to show you just how risky these banks are, and some of them have just gone insane since they reported earnings, and we'll get into that a little bit later. First of all, there is so many stories from so many different people within industries that are being affected by what's going on with the rising amount of bank sales that you've got to hear this. So people who work with overextended real estate borrowers in the Toronto area say they've never been busier in more than a decade. I mean, doesn't that kind of tell you the story of what is really happening and set the stage here? The number of homes that have been taken over by lenders under power of sale is up almost 60% from the same time last year. So that's an incredible increase that you're seeing in the amount of bank sales that are happening. Some in the sector are comparing the current climate to the fallout from the financial crisis. A sales representative with Valerie Park Real Estate keeps track of all the distressed real estate sales and said that searches of the Toronto Real Estate Board show that at least 228 current active listings described as a power of sale or some variant. That's up from 143 in the same period last year. So again, just an insane increase in the amount of bank sales that you're seeing. And then John Flynn featured in this article here. Happy to see that. Realtor John Flynn, who posts statistics on his social media and YouTube channels, argues the absolute numbers may be even higher. By his count, the total of power of sales has passed 780 listings. And this is that chart that I showed you earlier. And you're just seeing this has really skyrocketed. And it really started around March of 2024. So obviously you had the Trump tariffs that happened around here, and this is happening in the middle. So obviously the mainstream media a lot of the time is blaming everything and the economic woes that Canada is experiencing on the Trump tariffs, but that is complete bullshit as we keep blowing apart on these videos. So again, it's just showing you what's going on there. Happy to see John is included there. When the demand letters have been served and a power of sale process is underway, borrowers will often hear from somebody from a law firm, and then basically they just say that they've been doing this about 35 years. And she says before you'd have waves, but lately it's been full bore. I would say 2, almost 3 years, and it is not stopped. We've been constantly full on busy. One change she is seeing is that many of the borrowers have less equity and larger debts than in the past. Most of my files, at least 70%, used to have money left over. We still have some, but not nearly as much as before. More times than not, they don't get any money, she said, and they often owe. So if you take a look at why that is happening, it's because real estate prices are down significantly. And in this massive top that you had here, all these people that started buying around 2020 here, they are all underwater right now. And you've also got a lot of the people who are on those negative amortizing mortgages who are going to owe more money as well on their mortgage. So that is going to play into this as well. And when people are losing jobs, that's what you see happen. People lose homes if they are underwater.
But just 7 months later, she was laid off from her well-paying job at Microsoft. And at the same time, soaring interest rates nearly doubled her mortgage payments.
And I said, okay, well, I can't afford this. I started to default on my payments.
She says she tried to sell her house to no avail.
Because they can't sell them. Maybe they need to downsize. Maybe they need to move to another location for a job. And that flexibility isn't there when you own a home. So it's really actually an advantage renting in a recessionary, depressionary environment, which Canada is definitely in. And then you're also seeing what's happening here. Big Six mortgage arrears surge above national average. So this is mortgage arrears, which is incredibly telling across across the country, you are seeing that a trend is forming here. Canadian banks are seeing mortgage arrears climb to multi-year highs according to the CBA, and I don't believe their data for 1 second because it all comes from the banks. Historically, the big six banks are known for their low-risk approach, but recently regulatory filings show that most have now much higher mortgage arrears. The unusual skew is far from over, with most banks also reporting fast arrears growth. And the thing is, you look at a lot of those condo completions that are coming online right now. Well, in this article, they are pointing to the fact that that is happening. A lot of these people who bought investment properties, particularly condos, are absolutely screwed. And that is what they are saying here. I do encounter a good number of clients who paid the deposit for an investment property, and now the price of that property has fallen, so they cannot find a mortgage to cover it. So that is just going to increase and increase over the time. And she also said something really telling here, which is that there was a lot of amateur investors who flooded into the condo market to buy apartments. I think that's incredibly interesting and telling of where you are, or were, should I say, in the cycle, because obviously back then in the cycle, you were in that blow off top phase, in that mania phase. And when you're in that mania phase, you just have the dumbest of the dumb who are getting into the market. So it's absolutely crazy what is happening here. And then the trend of arrears here, as you can see, BMO highest, CIBC right behind, RBC right there. And now I want to get into the banks, because some of their leverage ratios dropped and some of them increased. And obviously the one that I'm most concerned about, and has been a red flag since they reported a loss last year, is Laurentian Bank, which now has a debt to equity ratio of 705%. And that is crazy when you consider that that is nearly double the Royal Bank of Canada's leverage ratios. And both are chartered financial institutions, so have access fully to the Bank of Canada repo markets and everything like that. A chartered financial institution is a systemic bank to the banking system. So if Laurentian Bank went down, that would have wide-reaching consequences for the other banks as well. So that is important to note here. And you've got CIBC, which has a debt to equity ratio here of 482.5%. Well, if we go over to where arrears are growing the fastest, CIBC is right there. Now, RBC's leverage ratio actually went down here, and it's now at 353.8%. So maybe they heard one of our prior videos, I don't know, and are now working to reduce that. But just to give you context, guys, you've got DBS Group at around 252%. That's a bank in Singapore. You've got Wells Fargo at 231.6%. That's obviously in the United States. Bank of America, 296.7%. So as you can see, they're all way down. There's only the Bank of Montreal that has a low debt to equity ratio, and that has been reduced as well. And it's no wonder, because that's what you should be seeing, right? When you've got arrears that are this high, when you've got risks coming on your balance sheet, you want to be reducing your exposure and your leverage, not actually increasing it, which is what Laurentian Bank is doing, along with abysmal earnings as well. So I think it's very interesting what is going on at the big banks. And interestingly enough, if you look at TD Bank down here, they have the lowest in terms of the arrears there. And if you look at TD Bank here, they're stacking at a 406.1% leverage ratio there. I also threw EQ Bank in here just to illustrate that as well. So Laurentian Bank, just to show you, this is up from 2015. So you can see the debt to equity was reduced here, and since then it has ripped from a low in 2018 of 485% to now over 700%, which is just crazy for a chartered bank and financial institution in Canada, and is just illustrating what is really going on there. And what's really interesting is you are seeing the arrears rate climb. It's up 21% from last year. So more and more you are seeing these arrears grow, and it's actually now at the highest since February 2021. So this is getting more and more gnarly, and the risk is increasing. And we all know that those big five banks, they piled into the condo market and trying to save that, lending to developers. And also some of them have done the blanket appraisal like RBC. So that's a major risk, and it's just another risk that that is formed on their balance sheet. Let me know in the comments what you think about that leverage ratio at Laurentian Bank. Is it anything to be worried about? And if you want access to Investing Pro, which I was using in this video, then there's an affiliate link in the description below. It also helps out the channel and it is a great tool. I use it all the time. Thank you so much for tuning into this video and I will see you in the next one. Take care, guys.